Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is October 28th, 2012 edition of Market Outlook. Please be sure to participate in our investment survey, and we'll be sure to send you the results for your participation. We've actually gotten some interesting readings over the past several months since we've initiated this, so the more people that participate, the more accurate it'll be. In addition, if you like this video and like the text, you can sign up, get it for free on a weekly basis. So, at a couple of interesting points, obviously the U.S. presidential election is going to have a significant impact on the market. So they've been trading in somewhat of a choppy manner with a downside bias over the last couple of weeks. But we are at an interesting point, and we're going to cover those right away. First, though, I had promised everyone we're going to start off looking at Apple, and we are at a couple of interesting points. So let's get going on Apple. First of all, you can see from these lines here, these are our channel lines, right? What we did, we took the recent highs from early in the year to the recent highs back in September. Drop this parallel here, and you can see how we're sort of neatly trading within that parallel. Now we are on the lower end towards this parallel line from the highs, so this is a interesting and valid channel. Now we are at the bottom of the channel, and at the same time, with the earnings announcement, touched the bottom of the channel and also just about touched the 200-day moving average. Now that 200-day moving average has been a really good indicator for longer-term players and even shorter-term players to play off of that. Now, a couple things about this 200-day. One, it's sharply rising. So even with this 15% correction in Apple, you're talking about coming down to a very steeply rising 200-day moving average. The last time it touched down was back in 2011, and it did it several times. You can see in October and then later on in December that 200-day moving average, this rising 200-day, acted as really good support. Now, so that's one thing. The second thing is, with that earnings report on Friday, you can see that we had a huge surge in volume. So that potentially, whenever you get double the average daily volume, and you got pretty much that, you can look at that and bracket the day of that particular trading day and use that as sort of a guide. Anything that trades above it would tell you that that move and the capitulation on that move is over. In addition, this was a new 60-day low. So a new 60-day low with excessive volume. If we can get above the highs on Friday, that would be a good sign. You could also potentially buy it against a test of the low. So anyway, you've got a couple of things going on here. You got test of the channel, a test of the 200-day moving average, a potential blow-off bottom on a 60-day low is another technical indicator. Furthermore, we also have something happening on a weekly basis, which is also quite interesting. Our relative strength indicator is indicating it's the most oversold it's been since 2010 on the interval that we use, which is a short term, just a couple of weeks. And you can see we're trading at 245. Now, can it go lower? It could, but this is pretty extreme. This is an unusual opportunity. It's pretty much the lowest we've been, since the actual lows back in 2008. So this is a pretty extensive push to the downside, with indications that the momentum might have been played out, and we're looking for a potential reversal here. Now, let's take a look one other thing about some upside targets. You can see we have a declining or flattening out, really a declining now, 50-day moving average. So that 50-day moving average that is declining is somewhere around the 660 level. So you're talking about a good 10% move potentially before we'd have to take another look and see what's happening. So that is Apple. Now let's take a look at NASDAQ here. You can see NASDAQ sort of mirroring what Apple has done. It's also now sitting right on the 200-day moving average. You also basically made a new 60-day low here on Friday along with Apple. It sort of mimics it. It hasn't acted quite as poorly as Apple. It only corrected from 70 or so down to the 65 level, not nearly the 15% correction that you've seen in Apple, more like a 7 or 8% correction. So again, you had a positive close on Friday, marginally, but an up day in volume. So that's basically an accumulation day. So that's looking not too bad. Let's take a look at spiders, because spiders are the best performing index overall. Let's take a look. You can see we have this this channel in here. We broke down through the 50-day moving average, but you can see we've been consolidating at a much higher level than the 200, so we're actually in a bit of a stronger position overall. You also have lots of sideways action for 1, 2, 3, 4 days. So if you can bracket that level right there between the highs of the last 4 or 5 days worth of action and the lows, you can play a breakout through either side. In addition, we did get to an oversold reading on the daily RSIs. So with that, we're going to take a look at some of the market internals, and you'll see that we're sort of converging on a potential buy signal here on our market internals. Let's take a look at now these are a bunch of composite indicators for both the S&P and the QQQ. So looking at the S&P, we've broken it down where these two graphs here on the bottom, one is the short-term overall picture, which is good for looking out 1 to 3 days, and the bottom one is looking out longer term for more like swing trades. We do that both for NASDAQ and for the S&P or the Qs. So these are the NASDAQ 100. So interestingly enough, you can see we had been under pressure, but on Friday, with the bounce on Friday, we've actually moved into positive territory. So on a short-term basis, definitely looking a lot more positive. You can see we had been under pressure for several days as we got the sell-off. Now, interestingly, we had been really positive looking out 1 to 3 weeks. Now you can see that the indicator moved off from a moderate bearish bias during the past week or so to 10 days, has now moved to neutral. Okay, so overall market internals here are looking that the downside momentum has probably reached its maximum there for the moment. So going to NASDAQ, you can see in NASDAQ we've been under pressure. We're in the red on the short term, and on the close on Friday, we actually moved to neutral. And same thing for the intermediate. So we went from looking a bit negative on the short-term basis, neutral to negative recently, moved back up to neutral. So things are definitely improving on this sell-off, and in fact, you know, the situation with Apple may be a lead indicator for the whole market. Let's also take a look at one other piece of information here. Let's take a look at the VIX. Now the VIX is sort of interesting because if you remember from last week, we were a bit concerned because we moved over the 200-day moving average, moved outside of the Bollinger Band. Now we're back inside the Bollinger Band, meaning that's a sort of a short-term buy signal, but we're trading right on the cusp of the 200-day moving average and above the 50. So sentiment is definitely at a inflection point. Again, if it follows, this will start trading under that 200-day, confirming the other indicators that we looked at and indicating a move back up. But let's keep an eye on this daily VIX indicator, because again, around 1770, excuse me, let's get an exact price here. 1780 is the 200-day moving average, and you can see we just closed one tick beneath it. So again, more leaning towards the positive. You got that short-term pop above the 200, above the outside of the Bollinger Band, which indicated that the sentiment was definitely turning a lot more cautious. A potential sell signal in this particular indicator was at hand, but it's now back down and trading at the 200. So let's take a look and make sure that we're keeping track of that. We're seeing, along with the other indicators, that this might have the downside move might have run its course. Okay, well, I know that there is a storm this weekend. That's it for now. You can see the markets are definitely at an interesting spot, especially Apple. Could be a unique opportunity to pick up some shares relatively on the cheap. But also keep in mind that we do have a potential market moving event, which would be the outcome of the presidential election. And that could, if there's any upset there, could have a tendency to move the market sharply. And so anyway, stay safe. Bye for now. This is Keith Schneider, CEO of MarketGauge.com, and look forward to seeing you next week.